Good morning or good afternoon to some of you, and welcome today to our presentation on PPP loan forgiveness. On behalf of the partners and our COVID-19 team here at Boyum, Barenscheer, we want to thank you and welcome you to the new and big updates, as we're calling the game changer. Not only for all of you and for us here with the PPP updates. In my life, I got to have a game changer. Back in March, I got hurt skiing and I ended up breaking both legs, and I am proud to say through physical therapy I am back up and walking on my own. So big game changers here. We're all very excited. And now with a quick update on you or with you is that we have to give a disclaimer that the information we give you right now is as of now. Stuff changes still as we go along. There's going to be some updates coming through, lots of FAQs, probably an update to an application. So just know what we're going through now is what is true as of now. And with that, I want to introduce our team. First off, I am Stacy Shaw, CPA here at Boyum Barenscheer in our business advisory and client accounting services. And with me, I have today Chris Wittich, who's a tax partner. Also, we call him the Tax Tiger or Ravenous Tiger on Twitter. And then in the behind the scenes that are going to be answering questions as we go along, typing in the Q&A, as well as at the end, we have Randy Feld, an audit partner with us. Barb Sadi, a fellow partner of mine in the business advisory services area. Tiffany Shermack, an audit senior manager. Larry Davidson, and another audit senior manager. And Nick Swedberg, who I get to kick over. He is also a fellow partner of mine in the business advisory services, and he's going to go through some housekeeping items for us.
Thank you very much, Stacy. And yes, good morning, afternoon. We're right on that edge, and we are so excited all of you could join us. This is one of the most taxpayer-friendly adjustments we've had, and we were kind of waiting for this for the past few weeks, and we're just like giddy with excitement. We get to present this to you finally. So if you will look at the bottom of your screen, there is a Q&A section, which somebody's already got a question in there. Thank you. And this is a great spot to put some of your questions that you have and any clarifications that you're looking for. We will be monitoring this throughout the whole webinar. And if it's a very specific question, we'll answer it directly. And lots of them we'll answer at the end live, because I'm sure most of you have very similar questions. And thank you, Marilyn. I agree. Hooray on the healing for Stacy is the first question out there. I like it. There is and people have already found it, there's a thumbs up button in that Q&A section, where if your question is already in there, it helps us a lot if you just give it a thumbs up, because then it'll push it up to the top and we won't have to sort through a lot of redundant questions. And very quickly, we will have this webinar is of course recorded, and we'll have this posted up hopefully later today. Obviously, we spun this webinar up fairly fast. It just got passed last night through the Senate. So we are on top of this, and we'll have this up and ready to get out if you want to rewatch it later, because it's just so fantastic. We will be covering a lot of things here, and I'm going to pass right back to Stacy to go over the agenda.
Thank you, Nick, and thank you to everybody who does do the Q&A. That helps us to also know what are things we need to make sure we stay on top of and watch for you. So with today's agenda, the biggest thing is the whole team, we're always Googling and getting updates. And when I saw that information come across that the Senate had approved the bill, it was like a Christmas for me, a big gift of finally we have more information that's going to help all of our business owners. And that will be the new Ppp Flexibility Act of 2020. So again, another bill that we accountants had to read, or got to read, I should say. And then we'll quickly go through the forgiveness application. It's going to change, but we'll at least put it out there in front of you again. Go through the covered period and alternative covered periods. I'll go through payroll and non-payroll costs again fairly quickly. All the detail has been in other webinars as well. And then we'll go through the wage reduction limitation, the FTE reduction limitation, and then one of the big things is the 60% payroll cost limitation instead of that 75% number. Fast go through the documentation required, and then some nice closing thoughts that the team put together for you, as well as that live Q&A. So with that is, what happened? The Ppp Flexibility Act of 2020 has been out there. The House passed it, and thankfully the Senate did last night without changing it. And then we just need Trump to get that signed, which we don't feel that's going to be an issue. So the maturity that we talked about, this is for any amounts that don't get forgiven. And after you've watched these webinars and have the right strategy, it shouldn't happen. But if it does, it went from 2 years to pay it to now 5 years for loans after the date this is enacted. Good news is you can agree upon a different term with your lender. So it should be pretty much easy to be 5 years. The extension of the PPP loan period went from June 30th to December 31st. So this is another big game changer here that we'll be talking about throughout the program. And then one that made everybody very, very happy is the covered period ends on the earlier of 24 weeks. So right, we went from the 8 weeks to now 24 weeks to use this PPP loan, and then or December 31st. So those who already have loans or will be getting them soon, obviously the 24 weeks will end before the year end. But as people delay or wait to get it, they'll be pushed up against the December 31st date. It also, though, for those of you who have worked really hard and strategically used it within an 8-week period, there is an election. So again, this is an election to use the 8-week covered period. It'll depend greatly on where you're at within your business, whether you're open or closed. So we will be here also to help you through that decision. And then the 6-month deferral of payments now is just going from the date that you apply with your forgiveness application at the bank. And then another big thing is payroll tax deferrals were not allowed in the last bill, but as they amended it, the payroll tax deferral restrictions are now removed. So the application, again, not going to spend much time here. You have to submit an application with your lender. Lenders have been very good with sending out emails and keeping you updated. Once the application is ready, more than likely it'll be electronic through them. And you have up to 10 months after the covered period ends. I would think any banker that's on this or that you're working with doesn't want you to wait that long. And I know us as a team want to help you right away too, so you know if you're getting it all forgiven or not. And there's going to be the forgiveness calculation form, and then it still has the Schedule A and the worksheets. Not sure exactly what they'll look like. Shouldn't change much, but we'll keep you posted on that. Still going to have to do the representations and certifications. There is the optional demographic info that you can put in. We know, you guys, there are going to continue, as I've already said, and you may hear this a few times with Chris and myself or in the Q&A, more regulations are coming. They have different things they need to get adjusted and fixed, and there will be additional guidance for borrowers and the lenders, and we will be here through it all to get that information out to you. We do believe that there will be a simplified application coming after this big update, so watch for that. So on the overview, I'm not going to even spend any time on this. It's just you have a lot of information to put about your business and the loan numbers and information you have on the application. It's probably going to change, so we'll just go through to the next slide. Here's what it looks like now. It probably won't change too drastically, so it's just nice to see what it looks like. And again, it should be more than likely electronic and coming from your banker. And again, the thing that makes us all smile and kind of breathe a little easier is that original 8 weeks is now the 24-week cover period. So we're just happy as can be about that. And then the alternative payroll covered period, for those of you that are just new on the webinar, we talked a lot at the last one, so you can do an adjustment to when you decide to start it. It still will be a 24-week window, but it seems to be like it'll be awful hard to not get your 24 weeks of payroll costs with being able to use non-payroll costs too. And then with the 24 weeks, we also want to make sure that we're going to tell you about the non-payroll costs, but you want to get as much payroll costs in there as you can. So with that, what are those payroll costs that we can include? We get to include all the compensation, such as salary, wages, bonuses, commissions. I know a lot of times people were worried about bonuses. That's clear now. We can include those. And then for those of you that have tips or other things, you can include those as well. And then you get to have your vacation, parental, family, medical, or sick leave that you're paying out to employees. If you have to separate from someone, that compensation on the firing them or cutting ways gets to be included. You also have your employee benefits for your group healthcare costs and your retirement. And then again, the state and local taxes, we've talked a lot about this. It's the unemployment tax or the local tax. It is not the FICA or withholdings that a lot of people ask about. And now how do we decide what is eligible? Well, they came out and told us it's the costs paid or incurred via the application. and now it'll be during a 24-week period. It's paid the minute it either ACHs from your account or you give out the paychecks. And then it's considered incurred when the employee pay is earned. So that just comes into play at the end of your period, hoping many of you won't have to push up to that, but it's still there. And then if it's incurred, like I talked about, but not paid, it just has to be paid on that next regular payroll date. The compensation, again, this hasn't changed, so we cannot exceed the annual salary of $100,000. Of course, as our group, as we talked last night through the night and met this morning, we have to make sure you're noticing here that we're saying should. So this should be then a maximum during the cover period per employee of $46,153. Is it going to be? We'll kind of wait and see, but the way we understand it is it should be increased because it's 24 weeks. You can't count costs that were both paid and incurred. You can't double dip. So just make sure as you're submitting those applications that that's just one time. And now for the owner employee, we got additional information through the application process. So we cannot exceed our 2019 compensation or retirement or health insurance for those owner employees. And that seems to be anybody, even if they're just a small percentage owner. But we should, again, note that it's in red and we're saying should now get 24/52 of that pay based on the 24 weeks. For self-employeds that had to turn in their Schedule C, same thing, based on this act and how we understand it, it should be 24/52, and you all know how you applied, so we think it should be a pretty much no-brainer for Schedule Cs. The money you got should all be forgiven. Waiting yet on general partners, it's just the same information as we had last week, that it's the SE earnings multiplied by the 0.9235, and that should be updated too. Now let's talk about the ineligible or excluded. So if any employees live outside of the US, we can include them. Anybody who makes in excess of the 100,000, remember again, we're limited to that 100,000, but this is in red and should be a maximum of 46,153 for each person that is over 100,000. So again, that should be the way it is. And then you have to be careful. If you had credits that fell under that family's first act that came through on the second round from the Congress, we can't include them again. So again, there's another place you can't double dip. And then there's no additional forgiveness at this point for the retirement or health insurance for Schedule Cs on the self-employed or partners. But again, that should end up being more of a non-issue for us. So on the application itself, they're having us calculate all these payroll costs for them. So they first break it out between employees and then they have the owner employees as well. So the first table is for employees who made less than 100,000, and you enter this by employee and put their ID numbers with it. Calculate the amount that you compensated them, and then also include their FTE count. And we'll go into that in more detail later on as well. You have to watch for that salary or hourly wage reduction, which again, Chris will go into more detail, to make sure that no one took a pay cut. And then remember, and another great thing is the reduction exceptions are there as well as safe harbor. So we'll talk about that too. So here's what it looks like now. Is it going to change or not? Probably not much, but at least you get a quick view as to what that's going to look like as you get ready to do the forgiveness applications, but now obviously a couple months down the road. So that part will be nice. And now on the Schedule A, we have to then break out employees who made more than the 100,000. And again, here's where we're going to be limited, what we hope will be the 24/52. So same thing, make sure you enter in their compensation that they made, their FTE count, and factor in the same things we do on employees that were under 100,000. And again, just a view for you to see, what does it look like and how it more than likely will end up looking. Any of you look at these small tables and wonder, how will I ever make that work? They will just expect you to add additional tables for the number of employees that you have. And then we have the information that we need to include for the other payroll costs that will get filled into the same schedule here. So on line 6, it will be your group health insurance. It may be to the point where you have only the gross wages that you need to include, but just in case, still be sure to be tracking those. And they have to be pre-tax or after tax that you're covering. as a business. And then same for the retirement plan. It has to be for the employer portion, so not the employee portion on either of those two. And then I'll say again, it's the state and local taxes, so the unemployment, not any of the fees. So some states have fees, and then no taxes that you withhold from employees or FICA. And then on line 9, you'll include the amount to owners, which in their mind is owner employee of a corporation, self-employed, general partners. And again, we're saying presumably it's going to be capped at that $46,153 or the 24-week equivalent to what you got paid in 2019. So we're just assuming that's what they're going to do, but we'll have to wait for more guidance on that. And again, note on this one, it's the amount that's lower. So that 46 looks like a really nice number, but if you had lower compensation in 2019, make sure to recalculate that and use the lower number. And then again, if there's more than one owner, they're going to want you to include another table. And now as the FTE definition changed a little bit, which we had talked about in the last webinar as well. For a long time, we were thinking 30 hours and we were talking 30 hours. And now they came out and said, nope, it's 40 hours. Good news is we're still comparing both the base period and our cover period with the 40 hours. So we're still comparing apples to apples. So in the rounded to the nearest 10th, if you had an 8-hour-a-week employee, you'd have a 0.2 FTE. If you had 60 hours a week, sorry, we don't get to go over 1. We're still limited at 1. But then they said, now we'll let you use a simplified method, which is great, right? So you can have a count of 1 FTE for anyone 40 or more, but for anyone under, you can do a 0.5 FTE. So as you see from the example above, we now have that 8-hour person, we just get 0.5 instead of having to do a 0.2. And then the 60 again would be 1, but then also you guys, that 32 hours would also be a 0.5. So it's not always going to be the best for you. So you still have 2 options and you want to make sure you're looking at both. And then make sure again, the measurement period, which we call the base period, and the cover period, we have to do the same thing. Still have that safe harbor in place. So a lot of people have said, well, I'm worried I have to get to my 100% FTE. Then what do I do? Business still isn't there, maybe has declined. There's nothing that says it has to be maintained. So it says you have to reach that 100%, but at this point, nothing says you need to maintain the 100%. And then that brings us into the non-payroll costs, which I think really got to the point where we still can track them, but I would assume we're going to be mostly payroll costs as we go through and do these applications. So again, the original rule was that we couldn't exceed 25% of the loan. And now the new rule, and this one pay close attention to. So as it reads now, the payroll costs have to exceed 60% to get any forgiveness. And this 60% is calculated on your loan. So you'll take your original loan amount, multiply it by 60%. You, at this point, need to make sure 60% is paid on payroll costs. And then as it is now, I think there will be a cliff effect. So if you're only spending 59% of it on payroll costs, at this point, you could be creating a loan for yourself. And we don't want that to happen. Will this stay? Hopefully not. They know it's an issue and hopefully we'll be fixing it. But we want all of you to know now. It's just something to look at and think about. And then it'll go through the other non-payroll costs we've already gone through, so I'll be pretty quick. It'll be interest payments on any mortgages that you have before February 15th. Rent or leases before February 15th. You need to have lease agreements in place because those will be turned in. Utility payments for various utilities, again, need to have a service agreement before February 15th. And then at this point, you may get to where you have 80% payroll, but you have 60% utilities. You will only be reporting the amount you need to get forgiveness. So you're not required to report every payment you made for these things. You only need to include the amounts that you need to submit for forgiveness. And with that, I feel like you've heard a lot from me, and I'm excited to turn it over to Chris now, who will jump into some more items for you.
Thank you, Stacy. So let's talk about some of the limitations. So we've set up sort of what you can spend the money on. It's the payroll costs and the non-payroll costs. But what did they do to the limitations? Because the limitations have also changed significantly. you have 24 weeks to spend the money, but now you also have new ways to avoid some of the limitations or to reduce how they impact your situation. So the first limitation is the wage reduction limitation. And this one, we've said all along, can be pretty rough, but it's something that you can avoid as a business owner because you get to choose how much people are paid. And so you don't want to pay them less than they were making in the first quarter. And they've also come out and said, well, if someone chooses to work like part-time instead of full-time, obviously you're paying them less, but that will be taken into account on the FTE measure, not on the wage reduction measure. So that's very handy. And another way to avoid this wage reduction limitation is by restoring their wages. So if for some reason you did cut their wages, you cut their like hourly rate, if you restore them back to where they started, now you have until December 31st to do that restoration. So, I mean, really, this is entirely within your control. If you did cut their rate for some reason, then you can restore them by the end of the year. And if they elected to reduce their own hours, that won't count against you for this wage reduction limitation. And it can be a rough penalty, so it is worth avoiding, but realistically, we do think you can avoid it. Another note on this is that any employee that made on average more than 100,000 for a single week or pay period in 2019, those people are also exempted from this entirely. So, I mean, there's a good example there at the bottom that we've gone through where somebody's making 52,000, they get a bonus. Well, that puts them over for their 1 week. That employee is exempt then from this whole wage reduction limitation. So it's pretty rough, but you should be able to avoid it. And we would anticipate certainly being able to help you avoid it if you want to. The FTE reduction does apply far more broadly. And we've gotten some very good news on this as well. So we had been talking about if you cut a bunch of people, like in February and March, as your store closed or as your operation dramatically reduced, if you furloughed people or laid them off, then you have until June 30th to sort of restore and get back to that FTE count that Stacy mentioned. Well, now they've changed it and they're giving you until the end of the year to restore those FTEs. So that's great news. I know we had a lot of people that were planning on like hiring people back in June, whether they were useful or not. Now you have until the end of the year, so you don't need to go out and hire people that aren't useful. You don't need to be paying people to stay at home and do nothing just so that you can hit the FTE count, because now you've got until the end of the year to hit that restoration for the FTE count. Another potential problem, even with that, is for a business that is closed or when they reopen, they're dramatically reduced in terms of the number of employees that they can have working at once. And so they've also said that during your covered period, if your business activity level is reduced, and it's because of like the CDC guidelines, it's because of the local rules saying that you can only be operating at 25 or 50% capacity, that is not going to count against you for this FTE. They want you to restore your FTEs, but only to the sort of level that the government's going to permit you to be operating. So if you're stuck at 50%, you really only need to get to 50% now of those FTEs, because that other 50%, that's not your fault as a business owner. That's just what the CDC guidelines are telling you, and that's what the local authorities are telling you to do. So that's an interesting add to this, and it can be very helpful for those businesses that are still dramatically impacted and they might be in the long term here. 60% payroll cost limitation. So this one, they probably got wrong in the way they wrote this bill, and the senators have expressed that they intend to fix this. But I think it's worth talking about what it says right now. And it's not the same as how it was set up before. It is different. And they wanted it to be the same. They just wanted to take the 75 and change it to 60, but they didn't accomplish that on this first run through. So now we're looking at this cliff situation where you have to spend 60% on payroll or you do not get any forgiveness. You have 24 weeks now to be spending it on payroll. So the hope is that you will get to 60% because you have this very long time frame now. So we're hoping and we're thinking that people shouldn't have a huge problem with this 60% because you have such a long period of time. But as it's currently written, if you spend 59% on payroll, you don't get any forgiveness. I think they'll probably fix that, but at least it's worth knowing. And I mean, if you're worried about the 60% on payroll costs, you should be doing some pretty detailed modeling anyways, because your business is clearly dramatically impacted if you can't get to 60% of the payroll costs given 24 weeks now to spend the money. So I think it's worth mentioning, but I do think I don't think it's going to apply widely to businesses just because you have such a long time frame to spend the money. And we think they're going to fix it and go back to sort of this pro rata ratio that existed before. But it's worth noting. With 24 weeks to spend the money, I mean, we're really looking at a lot of businesses are going to end up spending 100% on payroll. And so whether it's they fix this and you get the sort of more traditional approach to the 60-40 pro rata, we don't think it's going to be a big issue just because you have so long. I mean, they basically gave you 10 weeks worth of payroll money, and now they're giving you 24 weeks to spend it. So even if you're at greatly reduced sort of employment levels, we still think you got a pretty good chance of spending all, if not most, of the money on the payroll. So what kind of documentation are you required to submit? This has not changed, but I think it's worth noting, especially on the payroll, because I think now a lot of people are going to spend all this money and it's going to be just on the payroll. So bank statements are going to help support those payments, but realistically, I think if you're using a third-party payroll provider, that's going to be the key piece of information. The paychecks, the ADP, Gusto, QuickBooks, these PEOs, they're going to be able to print out a report that shows exactly what you paid people during the now 24-week period, and that's really going to be the kind of documentation they're looking for. Also, payroll tax filings are certainly good for that. But I mean, if you're doing the payroll yourself, you might not be able to print out sort of a nice, neat report. But just those payment receipts, the canceled checks, the account statements showing these contributions for retirement plans or the health insurance, stuff like that should work for the documentation. The FTE counts, you still don't need to submit that directly. You're just going to tell them what your FTEs were, and then internally you're to keep that kind of documentation. And all of the exceptions that go along with that FTE count, that's going to be on you to just document in whatever way makes the most sense. If people resigned or requested less hours, just document that as best you can. For the non-payroll costs, we do think the need to document this is going to be reduced if you just spend 100% on payroll, but we're just looking at sort of the normal course of business. You're going to have the statements showing how much rent you paid, the bank statements showing the payments were made, copies of the lease agreements, copies of those utility statements, that kind of thing, copy of the amortization schedule for the mortgage. So those are all sort of fairly standard documents, which you should be keeping anyhow. But that's what you'll need to submit for the loan forgiveness application. Again, there's other things here that you don't need to directly submit, but you do need to keep. And something to note here, all of your documentation needs to be kept for 6 years. And so that's longer, perhaps, than some of your document retention sort of normal rules, but it does say 6 years. The SBA could come in at any point during those 6 years in theory and look at this. So you do want to be keeping those in a separate file. They should be in your normal file, and you can sort of do normal document retention with that, but you should have a separate PPP file just to document all of these things and document, I mean, going back to sort of why did you need the loan in the first place? Why did you get the loan in the first place? Documenting all of those things in addition to all of the receipts and keeping it for the 6 years. So, I mean, we've cruised through a bit, and now we want to spend some time on these closing thoughts before getting into the Q&A. We've highlighted in red as we've gone through what the new items are. Some of the stuff is not new. I mean, the definition of a rent payment or utility payment, that hasn't changed. You can refer back to all of the old material on that. But we want to be sure we're highlighting and being clear about what is the new stuff that passed yesterday. 24-week covered period. That's obviously the #1 highlight. That's the best news in this whole thing, but 24 weeks instead of 8. Every time you thought, I got 8 days, I got 56 days, well, now you have 24 weeks, which I believe is like 168 days. That's a long time. So if you want your period to end in 56 days, you can still do that. But you now can do these 24-week periods, which is tremendous, tremendous news. The payroll costs. It used to be sort of a 75% limitation. Now it's a 60%. And it looks like they're going to have to fix that so we avoid this cliff at 60%. But certainly there's additional flexibility, it looks like, is going to happen there. As long as you spend 60% on payroll costs, you'll have a little more room for the non-payroll costs. Those new PPP loans, the forgiveness, if it doesn't happen for some reason, I mean, once again, we think a lot of people should be getting teed up for 100% loan forgiveness now. That was very difficult for some businesses to achieve before if they were closed for a part of their 8 weeks. But now with a 24-week period and with a lot of the businesses we're seeing open up, we do think 100% is a more realistic goal for the forgiveness. But if you don't have 100% forgiveness, now you're looking at between a 2 and a 5 year minimum maturity. You can negotiate with the bank on the terms, so more flexibility there. The Fte Restoration Period, we had been talking about June 30th, June 30th, June 30th. Well, forget all of that. Now you have until December 31st. So you have 6 extra months to make that Fte restoration happen. And so all of those things you were maybe going to do before June 30th, you can delay them until December. And hopefully, I mean, the economy sort of bounces back and the restrictions are lifted on some of these businesses, and you just naturally will get there on your own. But if you still are looking at it and you get to like December and you still have not managed to restore, then you're going to look at, do I need to hire people here in December just to make that restoration happen? And a new exemption here for these FTE restorations. So we've got, if they decline their position, if they get fired for cause, if they voluntarily resign, then you're covered on the FTE. If they reduce their hours, you're covered on their FTE voluntarily. And also now, if the business activity is limited due to all these CDC guidelines, you're also going to be good on that FTE count. I don't know how exactly you're supposed to document that, but probably looking at both your revenue and just what the local guidelines are, taking a copy of those like executive orders and keeping them in your file to show that you were told to be, you could not exceed 50% capacity, something like that. So we've left this slide in, but once again, the part in red, realistically, we think if you've got 24 weeks to spend this money and potentially 40% can be spent on the non-payroll costs, we do think there's a great opportunity, a big incentive, and a high likelihood that you can achieve 100% loan forgiveness if you're paying attention and if you're keeping good track of how you're spending the money. So I think that's very good news, and we think there's going to be far less loans left over. But if they are, you got the 1% interest and the favorable terms on those. A lot of people have PPP loans, but a lot of people also have EIDL loans or the EIDL advance. We're still seeing, I'm still seeing some of these EIDLs come through now, and people applied 2 months ago. So you might still be getting it, but it appears they're generally limiting these EIDL to about 150,000. The advances are really just that. It's an advance on the actual EIDL loan. So in the vast majority of situations, the EIDL advance is just going to be tied in with your EIDL loan, or it's going to become an EIDL loan. And it really is separate from the PPP. And you can certainly have all three of these things. The terms on those EIDL is just that you need to use it for different things than the PPP. So you can't pay your payroll with PPP and then also pay it with EIDL money. That seems easy to avoid or to not do. But you can use the EIDL for other things like buying supplies, PPE, personal protective equipment. We thought that might end up in this bill and it did not. So that's another good thing that you could use EIDL money for, is those types of purchases as you're sort of getting the business back to the sort of the current state of the new normal, perhaps. The one thing you really can't do with an EIDL loan is expand your business. It's a disaster loan. It's not an expansion loan. So as long as you're not using it for the same things as your PPP, exactly the same, and as long as you're not expanding, the EIDL is far more generous, and there's no like time frame. You don't have to spend it immediately. I know I've talked with a bunch of clients that got an EIDL loan, but they got the PPP, and now they think, well, maybe I don't need the EIDL loan. I mean, you can always take the EIDL loan, and then consider just paying it back sort of whenever COVID is over. Hopefully that's soon, but you never know. So there's still a lot of guidance that we need that we're missing. And I think like the first two on this list are really the two. I mean, we think that clearly 24 weeks should count now. So now we're looking at a limit of 46,153, but they haven't specifically said that. It's just the SBA guidelines based on the law. And since the law has changed from 8 to 24, we would expect them to update the guidance to say that now you can count up to 46,000 for an employee or potentially an owner that was paid in excess of 100 grand. So I'd be looking to just get confirmation of that. We think it should happen, but obviously it hasn't yet. And then I'd like to see more clarity on when you can submit the loan forgiveness application. it's a bit unclear whether you need to wait for the end of your covered period, which might be the 24 weeks. And I mean, what happens if you've spent 100% of the money after 13 weeks? Are you really prohibited from submitting your loan forgiveness like week 14 because you haven't finished the period, even though you've done everything and you should get 100% forgiveness? We're not sure on that. So, and I mean, I think the loan forgiveness application is going to change anyways, and potentially a streamlined version, especially for Schedule C people, should be coming. So, I mean, there's a few other issues there which it would be good to get guidance on. But if you think about now you have 24 weeks to spend it on payroll, maybe the answers to some of these don't matter anymore. We're trying to get more costs to count, but if we have 24 weeks, maybe we don't need to count those extra costs or get that clarity because we'll be over either way. But certainly there's going to be a ton more guidance that comes out. It just seems potentially a lot less important since now you have the 24 weeks. Something to highlight, I mean, if you're listening to this, you probably have a PPP loan, I would hope, or you just like hearing us ramble about PPP loans. But if you have a friend or another business owner that doesn't have one, or they stayed away from it for some reason, I mean, these rules are way more generous than they have been in the past. If you know somebody else who hasn't applied for one, you might encourage them to talk to us and just see if we can help them look at it again, because there is money available still, which is a bit surprising, but it appears you can only apply through June 30th. So they do need to act probably quickly, but there are banks that'll process these still. And if you know somebody else who doesn't have one, I would have them reach out because, man, this seems like it can be a real good deal now. The HEROES Act, which the House passed a couple of weeks ago, that's going to get torn up. That'll probably end up being the next thing that gets passed, but it won't resemble the HEROES Act. A lot of the Congress people were talking about sort of a July-August timeframe. So I'm not sure what'll end up being in that bill, but I guess I can assure you that whatever ends up being in that bill, we're going to read it. And if it has broad impacts for businesses again, you'll see me webinaring from the basement again, or maybe from the office. Maybe we'll be back in the office by then. I think another thing to mention is Congress is still looking to give a tax deduction for these costs incurred. It is expected to pass, so I think it's okay now to plan. They've made it very clear, both sides of the aisle, everyone agrees this will happen. So I would sort of be looking for that to get stuck into that bill that might be sort of the July, August, whatever the next big stimulus bill ends up being. So I think this is the sort of the closing slide to wrap up before the Q&A. PPP loan forgiveness is very important, and we're here to consult. We're here to help you guys. We have a whole team. It's not just me and Stacy by any means. So there's the loan forgiveness application. For some clients, you're going to want to complete that application, and if you want sort of advice or recommendations before you submit that to the bank, we can do that. I know some other clients are looking for more having us prepare it and sort of gather those documents for them. We can do that and provide that strategy, provide an assessment of sort of the documents that you need, but you're not submitting to the bank. At this point, we're still looking for you as the taxpayer. You're going to be the one that signs that loan forgiveness application, but we could be a little more hands-on and involved in helping you prepare that. And we think that application is still going to change. So we're not going to do that today, but soon as that application gets updated, we'll be here to help you. And then for the bigger loans, I think more consulting is probably necessary. And so we're going to have expanded services looking at your eligibility, the documents, the FTE calculations, because we know the SBA has said that all the loans over 2 million are going to get audited, but they can look at the loans less than that. So we think really 1 million and above, those are going to be subject to far more scrutiny. And so really we're here to help with that process and to sort of double check, to help with a strategy, to make sure that what you're about to send to the bank is in good order and is keeping with whatever the current guidelines are sort of the day you send that in. Because staying up to date is obviously very critical with these things, but we're here to help. And to be more clear, there's 7 of us. I mean, there's other folks at the firm that are helping with this too, but the 7 of us are really the team. And so you've got all of our contact info here. It's been great sharing with you guys. I think we'll turn it over to Nick for a little Q&A.
Awesome. Thank you, Chris. We have been busy in the Q&A, so thank you all for putting your questions in there, and hopefully we'll get to as many as possible, or at least give you some clarity on a few of these questions. Stace, why don't I have you come back and we can go over a few of these, and thank you for marking a couple that you would like to get to. I'm just going to start with the highest one. It seems lots of people wanted to know on this FTE restoration, is this measured on, well, I guess now December 31st? Is this measured on June 30th? How does that work exactly?
Okay, you guys, based on the information we have, and I would say probably most of the team, we have been reading and searching and following other people too. So based on the guidance we have now, it is the restoration is on or before. So if you hit your FTE already, you know, during this 8-week period, the way we read it, you're there. Does it say anything about, do I need to then maintain it? It does not. And so we don't have a definitive for sure answer, but we can say, as we understand it, it is getting to that FTE count to the 100% is then you've gotten there. And that's what you want to show on your application. And we will for sure keep you updated on that, because that's a big piece. And I did see a lot of you asked a similar question, just in a different fashion. So I hope that's helpful. And I wish I had a for sure. So I think people say, well, I was going to plan, I stayed at maybe 70% through my 8 weeks. June 30th, I was going to go to 100% and then apply. And now it's scary, right? Now you're like, shoot, now I have to wait till December 31st. You still have that opportunity in this 24 weeks if the PPP money's still there, or business is doing okay, to try to still get to that FTE number to make the 100% for your application. So do stay tuned. We will definitely be thinking of all of you and keeping you updated on that.
Perfect. So one more for you before I bring Chris back on, because Chris does have a hard stop for a large national AICPA meeting he has to hit. But in regards to the paying people more than they earned in 2019, how does that work with people who get raises, and does that affect our forgiveness?
So I think you guys, with the part, I'm glad you asked that. Thank you for asking. As we quickly kind of sped through this today, we wanted more time for Q&A with the updates, because we know it so well. We're like, oh, it's really the 24 weeks and the December 31st. That having to tie back to 2019, think of it this way, that's affecting your owners. So the employee owners, those self-employeds that are on 1099 contractors, or the partners in a partnership. Don't worry so much with each of your employees. They obviously will get raises, they'll get bonuses. It is just a stipulation on those owner employees. Nick, do you think does that give more clarity?
Yeah, I think that helps, and we'll see if more questions pop up on that. But Chris, if I could have you come back so I could make you talk for a few more minutes before you jump on your other conference call. And just a very quick plug, if you are on Twitter, you need to follow Ravenous Tiger. Yeah, his handle's there. He was just quoted by Forbes.com today. So he is fairly well known, and it's very humorous. He
went a little crazy with the gifts yesterday.
Yeah, there was a lot of Napoleon Dynamite gifts yesterday. I enjoyed reading through those this morning. Oh, and there we go. There's your question. Do we know that the limit of 100,000 is going to be expanded to match that 24-week period, or is that an interpretation?
Yeah, that's an interpretation. The law says the limit is 100,000, and the SBA interpreted that as, well, if you have 8 weeks and it's 100,000 is the max that'll count, then we've got this 15,000. That's just how the math works. So now that you have 24 weeks to spend the money, it follows that their interpretation would have to change and match and say, well, 24 weeks worth of payroll at 100,000 would be this $46,000 number. They haven't said that yet. I mean, the president hasn't even signed this thing yet. Well, I guess I should check CNN. Maybe he did today. I don't know.
Yeah.
But the SBA guidance will follow probably next week, but they're going to have to take their guidance and just overhaul it to match what the new law is. So it stands to reason that it would be expanded to the 46,000 because that's 24 weeks worth. It hasn't been set in stone, but the law never came out with this $15,000 number in the first place. That was the SBA's interpretation of it. And so we would expect their interpretation to change and match the time frame that they're now giving. So it's not set in stone, but we say it should be the 46,000.
Thank you for elaborating on that. Can we use EIDL funds for payroll after our PPP is all used up?
Sure.
Nice and easy. Another nice and easy one. Do we, now that we have 24 weeks to spend the money, can we go and apply for more?
No. Sadly, no. Nobody can, well, almost nobody can apply for more. There is a very narrow exception there. If you were like a partnership that did your application wrong based on what the old rules were, and those people probably can't even now anymore, but there's a very narrow circumstance where you could reapply. We actually have a blog detailing those situations on the website. But in general, no, which is why it seems likely that you could get 100% of the money spent because they only gave you 10 weeks worth of money. And originally they gave you 8 weeks to spend it. And it was like, well, now we got to try and figure out if we can spend it all. If you have 24 weeks to spend it, I would anticipate a lot of businesses are going to run through this money long before they get to their 24 weeks.
Yeah, agreed.
Yeah.
And a very common question that I think encompasses a lot of different types of businesses. If we pay salary or hourly plus tips or commissions or bonuses based on production or sales, but now obviously this year we're down a lot, is that a reduction?
Yeah, we think it is a reduction. There's been not very much guidance about how you're really supposed to look at this reduction, but yeah, I mean, there are people that make just commissions, salespeople that are just commission based, and maybe they have like a tiny base salary, and then it's just all commissions. And so it does seem like in those situations, if there's reduced business activity, you might need to sort of kick in more to cover what their base was. Or, I mean, the other thing I'd say to that is now you have until December 31st to restore them to their level before. So, I mean, I guess you can sort of let them go at a reduced commission level for a while now, as long as you get them restored by the end of the year. But that's definitely a tricky situation when like the vast majority is commission income and it's not really like an hourly or a big base salary. But
Right,
you should have till the end of the year to restore those folks. And so I think that's a big get in this whole bill.
And obviously the commission one gets tricky, but like with you knowing salons so well and me running restaurants and breweries here, they would potentially be safe because of the executive orders, or could we use that as a backstop also, or does that not matter for the wage reduction?
Potentially. I mean, the wage reduction is separate from the FTE, and it seems like they've given a lot of guidance and a lot of exceptions for the FTE, and they really have said almost nothing at all about the wage limitation, which is weird. I think maybe that's coming at some point, but yeah, I think that's something to consider. I would also look at like salespeople that have big commissions. They probably have one period in 2019 where they got a big commission, and that would put them over the 100,000 threshold. So then it doesn't apply to them at all. I know I worked with one client where they just had a ton of sales reps and they're out there and they make a big sale and they get a big commission. Well, during that pay period, they far exceed the $100,000 average. And so then that salesperson is just exempt from the wage reduction limitation in the first place. So if their commissions like fluctuate wildly or significantly, there's a pretty good chance that person is exempt anyways. But if their commissions are a little more stable, like in a salon, they'd be a bit more stable. But even then, like everybody's got their big weeks. And if you have a big week, that could easily trip you over this $100,000 per pay period threshold. And then the limitation doesn't apply to you. So that's why I think if you really dig into it, you can find a way around that wage limitation. It might take some work and it might take some digging in and some research, but I think you can avoid it with some effort.
Great. Thank you. I can let you jump off if you'd like. I know Stacy's been flagging. She wants to jump
Adios,
back in
everyone.
here, I think. Thank
Happy
you, Chris.
PPP 24 weekday.
Yeah.
Bye, Chris. Thank you. We have so much fun, don't we?
Yeah. Well, yeah, we have not talked so much. Last night, all of us were just giddy because this was a big release for everybody. So many loans were about to term out, and that was going to be a lot of work. And this just makes it so much smoother and less stressful for you, all business owners, and us at the same time. So we're excited. Stace, so let's just start with, for payroll costs, gross pay or net pay.
Okay, so and I apologize because I said a few times to say do not include employee, their withholdings and such. That was just meant don't add that in. You do take their gross pay, so that's the number you're using always. And then what you can add back in is that unemployment tax. I was just trying to say do not, take gross pay and then add back any other sort of FICA or withholding. So I apologize for that. I hope that makes it more clear. Gross pay for sure.
Perfect. The 60% rule, is that a cap or a minimum? Or
So
what is that?
60% is what we're going to calculate that just to make sure we don't go under it, especially if that cliff stays. Hopefully that'll go away. But no, the purpose again, I'm going to go back to the purpose. Everyone who's been on this says, I've been just a cheerleader for what's the purpose of this PPP. It is to employ your employees, get them back on your payroll and off of unemployment. So they would love, and we would love if you get to 100%, because guess what? The big payroll providers out there are all working directly with Treasury and SBA and the AICPA to create the reporting that we'll need to turn in for forgiveness. So everybody who can get to 100%, we'd be just super thrilled with that.
Yeah. Agreed. And we didn't do a super quick plug, but that the resolution that did pass, HR 7010, was actually proposed or written by a Minnesota congressman, which is fun for us Minnesotans. Sorry, I know not everyone is, but we're kind of proud of that. So we're glad it was by somebody local. Stace, another one for you, the $10,000 advance on the EIDL. It kind of started that everyone thought that was maybe just going to be free money to get businesses spending again. Do we know, how is that treated now?
So on the application, and so the 10,000 he's talking about, some people maybe only got 1,000 or 3,000 because they ended up restricting it. At first it was 10,000 to everybody, and then they got such a great number of businesses obviously who wanted it and got restricted, so they then put it to 1,000 per employee. Got that money, and we said use that for something other than payroll and any other the expenses that you're going to use for the PPP, and you'll also then get that additional amount. the SBA now put on the application itself that said, please tell us if you got the EIDL advance. So not the loan, but the advance, and they will be reducing the forgiveness amount. So unfortunately, it didn't stay as great as we wanted, but again, that'll be part of that application process.
Perfect. And real quick, there's a lot of talk about Main Street loans from the Fed. Do we know much about those terms? Can we take those and the PPP? Do we know anything about the Main Street applications?
So I can talk a little bit to that. I follow that as well because I know that's been coming, and we're hoping for more assistance and help. You guys, what they really want that for is those businesses that are above us. So they couldn't get the PPP. They're sitting there struggling, trying to deal with cash flow and running their businesses. So it's really meant for those up to, I want to say it's 5 billion or 15,000 employees, something like that. I might have not the exact numbers, but it is not a PPP forgivable loan. It's not 1%. It's like the 2 or 3 month LIBOR plus 3% interest, and not sure yet on terms. And they've been working on it for quite some time. They say they're getting closer. So at this point, I think that's probably a decent summary for this group, because I would assume it's going to not affect us in this size of business as much as it is those who couldn't get the PPP. But we will watch that as well and give an update, whether it be a blog or if it warrants another webinar.
Perfect. One more for you, and then I'm going to have Randy come on after you answer this one. But if we already used some of our PPP money or transferred it out of that separate account that we've been using for items that we weren't positive counted, like maybe transportation costs or cell phones or something, and we weren't sure if it worked, but we know we're going to spend it on payroll now, can we transfer money back? Can we put it back? Do we need to? What are your thoughts on that?
So I think at this point, if we know it's going to be 100% payroll and we have the payroll reporting, those transfers that we did probably are going to end up being not applicable. But for those of us that are accountants and accountants at heart, guess what? We like things to tie out exactly. I would go through your worksheet for those non-payroll costs and just do transfers back in. But I don't think necessary, especially if you know you're going to hit 100%. But it just makes it clean accounting wise if you do that.
Thank you very much. I'll give you a little break to get some water or something. And Randy, if you could turn, oh, hey, there you are. You are Johnny on the spot. I like it.
Hey, I was warming up in the bullpen answering questions and
yes, we already have 97 answered. So thank you, group, Randy and team, for hitting those. That's a lot. So, and hopefully we're answering a bunch more. We just haven't cleared them all. It's hard to keep up on them. But Randy, one that you had marked that you would like to talk about. So 24 weeks to spend 10 weeks of money. Our new loans, so if we haven't applied yet, are they going to be based on 24 weeks?
No, I mean, there is still money left, like we talked about. I think there's about 100 million, 130 million left. But two and a half months of 2019 payroll is payroll costs is still the math that hasn't changed. So they're not giving more funding. They're just allowing us a lot of flexibility, very generously, to spend the money and get the forgiveness, which is amazing, especially for the companies that have been shut down or under government order. So it's pretty cool.
Yeah, I'm very excited for the restaurants. We can actually get some of this forgiven now, hopefully 100% even. And just to clarify, it's actually 100 billion left. With a B.
Oh,
you said million.
I said 100 million?
Yeah.
Yeah.
It's all funny money at that point anyway.
It is.
It's billion. So there's a lot of money left out there.
100 billion. And it's not, 130, I think, billion. So it's just not going very fast because so many people that were going to apply have applied. And I think our current belief is that you can apply through June 30th. We had some discussion in our team this morning about that, and the covered period for forgiveness goes through the end of December, but still still money available.
Another one on that 60%, because this is kind of a change and probably the only negative change in the whole bill that they might not forgive, they might fix. But as it stands now, if we hit the 60% threshold, but we don't fully restore our FTEs, is any part forgiven, or does that hit us into the 0%? Do we know any details on that?
Yeah, so there's, I mean, I think, a lot of what we said today is people have a lot of flexibility in spending the money, right? So either the 8-week period and the 24-week period. And if you're more than 60% payroll, that means you're good. And so then it becomes, we're looking at FTEs to see what percentage of the spend. You've spent 100% of the loan, and we look at two things. Either did we restore, cuts between February 15th and April 26th? Did we restore those at any point before the end of the year? Is our current interpretation. If you do, you're good. If not, and some essential businesses were in a situation where they had their people maxed out now, and they're actually they may be cutting later. So, if you don't hit the restoration provision, you're going to be looking at FTE counts compared to the base period. So those are the two ways to determine the percentage. Hopefully that was clear.
Yeah, it's complicated. I think it made sense. So lots of different discussion on just forgivable dollar amounts and the EIDL loan. Can an EIDL loan be forgiven at all?
No, and even the grant now, even the 10,000 up to the 10,000 grant that they were given out will reduce the amount of forgiveness. The SBA forgiveness application has that. The terms are great, and we're seeing, like I think you mentioned, we're seeing more EIDLs that have been for bigger amounts coming through that are more of a permanent, long-term debt at low rates that can really help companies restore their working capital and what they need to manage the business. But no, unfortunately, dang it, they've done so many good things, and no forgiveness on that one.
Perfect. Tiffany, you unmuted, so please, if you do want to hop in, I'd love to have you chat. We haven't seen you yet today.
Thanks, Nick. I just wanted to add on to answering that question about the EIDL advance that Randy was addressing.
Yeah.
If you think about it, when you applied for PPP, you had a max loan amount you could get. If at that time you still had not received an Eidl advance, but you got your PPP fully funded, then you got that cash. And then later you got the Eidl advance, let's say it was 10 grand, that was on top of or in addition to the PPP proceeds. So in essence, you got extra money in that process. So that's why then it's owed back. I mean, that's one way to look at it. So I just wanted to kind of interject on that EIDL advance because it gets confusing.
Thank you very much. Yes, that is a lot. Intermixing the two loans gets very confusing. I know there's a lot of talk on that. And actually, why don't we keep you here? Because also you can do a quick plug for salons that are open in Minnesota. Or did you go to Wisconsin? Because you were actually able to go.
No, so I was able to go to my salon yesterday. I was able to see my stylist yesterday. They were open and they were excited to be able to have people in their chairs. But,
That's awesome.
We did the whole mask for the whole time and all those COVID-19 measures. But it was great.
That's awesome. So 1099 consultants, I think the question is kind of going back to Schedule C owners. They can't apply for any extra money, can they? Or can their amount that they got just be more easily forgiven? There was some confusion on how theirs was going to be forgiven.
Right. So our understanding right now is it'll just make it that much easier for the full amount of your loan if you're a Schedule C borrower, that the full amount of your loan has a greater chance of getting forgiven. But that there's at this time, no chance to kind of go back to the well for more money.
Perfect. And the FTE count, on the original application, they were asking for employee counts, and lots of people have been referencing that number that they listed. Is that something we need to worry about?
And are we talking FTE counts on those tables in the application?
When you first applied for that loan, I think you had to put in how many employees you have.
So when you first applied for the loan, you gave them a head count. Our understanding, that was just to evaluate whether you were eligible as a small business. So no, that number does not impact all those average FTE calculations that we've been talking about now on the forgiveness side.
Perfect. And so for the 24 weeks, is that starting the date the loan was funded, or on the first payroll date, or what is the 24 weeks?
Right, so the 24 weeks starts, our understanding is it will start the date of origination of the loan, so the date you got the proceeds. The alternative payroll period we've talked about before is still in play, so you could use that as your alternative if you needed it for the 24 weeks. But we feel that in most cases, the 24 weeks is going to be so generous that you could just start it on the date that you were funded.
Perfect. I think that is about all
Awesome.
I got for you. So thank you for hopping
Great.
on and unmuting, so I can see you had some discussion you would like. Stace, if I could have you come back, I think just a couple more I would like to hit. Luckily, we kind of got to cruise through the large slide deck this time, so we won't need the full hour and a half. We'll give you a little bit of your lunch hour back potentially, but there's a lot of questions on if we can't restore our employee counts, or if we're trying to hire but they're not accepting, or if they are sick, I think non-COVID related, just medical illness, or if they were let go during this time period because of performance issues. Are all of those going to negatively affect our forgiveness, or do we know when those are okay?
Good news is, especially in the bill that we got as well, you need to document all of that. So as you're asking people to come back to work, and if they're texting you back or emailing or calling and telling you no, get that documented. You want to give them the letter. For those that are out sick, get that doctor note stating they can't work. For those who are retiring early, so so it's not that you fired them, but they're leaving you, then that's the separation. So you just need to have all that documentation and then include them as the FTE that they would have been in the base period. You know, so if it was a 0.5, you'd keep them at a 0.5, but that is all about the documentation. So in this case, keep all of that information in your FTE counts.
Perfect, and that's a great lead into the part-time employee count. There was two methods that we mentioned that you can use. Can you just briefly cover that again? There's a couple questions, I think, on that.
Oh,
one.
Sure. Yep. So in our base periods, which we have the dates that are included, which are different for just our regular businesses versus our seasonals. So it's last year through February 15th through the end of June, or this year, January, February. And we can help with those dates and information, but you're going to take the amount the person worked, and then are they at 40 hours or 32 hours, and calculate to the nearest 10. But if that's not possible, there might be some people, like a lot of our salons don't have people clock in. So they know that they're under 40 hours. So then they can just use the 0.5 is what we were talking about, whether they're 2 hours a week or 38 hours a week, they'd be 0.5. So it just hopefully made the calculation easier for everybody.
Yeah, hopefully. Gave us an option at least, and
Yes.
normally options are always a good thing.
Yeah.
If people left during the 2-week period and we don't plan on bringing them back, but we still spent 100%, because now we have so much time, sounds like it should be very easy to spend 100%. Say it was 2 people left out of 10, so we're down to 8. Will 80% of what we spent get forgiven?
Yeah, so that's a great question. So again, a little bit of math that we're calculating, and our FTE is at 80%. We don't have any desire or plan to bring it back to 100%, even on any given day. Then 80% of that loan would be forgiven, and the 20% would turn into a loan that now, dependent on when you get the loan and what the lender says, it could be paid over 2 years or 5. So it's not that it's zero. It's not like that cliff that we talk about with the 0%. This is an actual calculation based on FTEs.
Perfect. And again, just to reiterate, because I think there's a couple more questions out on it. The restoration, do we have to restore on a specific day? And when is that day? So
there's no specific day during your 24-week period if you now get there, or if you choose to use that 8-week period. If you have gotten the loan before this gets enacted by the president, then you can choose to use your 8-week period. You get a loan now, there's nothing written so far that you can use an 8-week period. It would be more than likely a 24-week period unless they change that as well. So I guess I don't have any more to add, unless you have
Perfect.
more, Nick, that you want
No,
to
I think that was great.
expound on.
I think that is all that I'm going to be able to hit right now. Some of the questions still out there, I know we haven't gotten to all of them. They're just very specific, or we might need a little bit more information to really answer it correctly. So I don't want to just throw out an answer if we don't have all the right facts. So whoever, any of our panelists that are not eating or don't have a big mouthful of food, if you want to just turn on your video just so we can quickly introduce you to the team that is here. You got to see there's Larry. He is a Q&A master. He probably got to most of your questions. And Barb Sadi, who she is incredibly knowledgeable on all the payroll tax credits. And now her role has got a little bit expanded because of this law made them interact a little nicer. So she's on the team and covering everything payroll related for us. So that is all we have for today. Thank you all for attending. This will be up on our website within 24 hours. I say that because the one person who isn't showing her video, Patty Fleming, who's our marketing specialist at the firm, is the one in charge of that, and she will get that. She'll work diligently to get that up as soon as you can. And please reach out. Here's all of our contact info. We are happy to chat. And if you reach out to one of us and we're not quite the specialist, if you're a salon and you reach out to me, I'll gladly get you to the right person on the team who's just going to be the perfect fit for the question or the industry you have. So with that, I think, are we all done? Anybody? Stacy, we're good?
So wrap up will be just information is new. We do believe it has become better for 99.9%. Those of you who are listening to this and wonder, oh, I might have some trip ups here, please reach out. We are here. We want to help. We want to guide you. We want to get you the information that's needed. And sometimes all it takes is that back and forth Q&A with us to get the consulting and guidance needed, because we do believe we can help you get to that, desired result, which hopefully for all of you is that 100% use and forgiveness. So just remember, there's a lot changing, a lot out there, but we as the team here at Boyum, whether we're on this slide or just anybody we work with, we want to help. So thank you again for being with us and spending your Thursday lunch hour. We appreciate it. So with that, have a blessed rest of the week and weekend.
Thank you.
Thanks, everybody. Bye.